Hello and welcome to Personable, a podcast focused on speaking to the world's best, enabling you to become the best that you can be. Whether you're a first-time listener or returning, please make sure to like, comment and subscribe. Currently, only 3 out of 100 listeners are subscribed to Personable, and we're trying to reach 1,000 subscribers before I get back to Duke in the Fall. Today, I'm honored to be joined by Lia Forcina Rubino. Lia is a partner and portfolio manager at LGR Capital, a former portfolio manager at BlueCrest Capital Management, as well as a previous portfolio manager at SAC Capital, Phoenician Capital Management LLP, and before that worked at Morgan Stanley. I'm incredibly excited to talk to you today. I wanted to get started by asking you why and how you got into finance and how you got to the position that you are in today.
Ciao Harvey, thank you so much for having me, first of all. It's probably not a very straightforward story, and it's gonna probably sound a bit funny. But I got there completely by chance. I got a degree in a university in Rome called University of the Vergata, and at the time there were no social media, there were no placement offices, and the way you used to look for jobs was either Family Connection or the Yellow Pages, which was this big book where you had the address of everyone. And I got my degree with full marks, and I started sending CVs to which I got no reply. And then by pure chance, I saw an advertisement on a newspaper for a master in econometrics at Università Cattolica in Milan. So I applied for that and I got a grant. I ended up in Milan. And then almost straight away, I started looking for a job because I had no interest whatsoever in econometrics. And Milan was the world of finance. And so I started looking for a job, and I was, really into trading. And I thought, I wasn't really sure what an investment bank was, but I knew I wanted to be trading. But, I'm 50, so it was a long time ago. And in Italy, the only thing women were doing in finance at the time was secretaries. So the average answer I got was I was a woman. There was no chance I could ever be in finance. So I actually got a job in a consulting firm called PwC, where I work in, just as an advisor to do risk. I was doing risk management for banks, essentially. But I wasn't really, I was at the beginning, and I really didn't know what an investment bank was, nor what you were supposed to do in an investment bank. And then a friend of mine, just completely by chance, one night in a bar, told me, look, there is this company called Morgan Stanley that is recruiting people. They're really looking for Italians. Why don't you apply? And I really have never heard in my life about Morgan Stanley. I had no idea what it was, but I knew I wanted to come to London. And so I took my chance and sent the CV. And I went through, I think, 20 interviews. And to my incredible surprise, they gave me the job. And until I got to the training program, I wasn't really sure what I signed up for, which I only discovered once I got to the training program, which was probably a peak investment banking, because it was 1999, so our training program was in Cannes. And there were at the time actually kids that were going from one training program to the other. So they were doing a month in Cannes with Morgan Stanley, then resigning, going to JP Morgan to do another month in Saint-Tropez, and so on. So there were definitely different times. And then I started in Morgan Stanley in investment banking. I was probably one of the worst analysts I ever had. I had zero interest in investment banking. I found it tedious. We used to spend hours just proofing presentations, making sure the fonts were consistent. And a lot of sleepless night. I learned mostly how to deal with stress and how to deal with complete lack of sleep. It was like being in an army, essentially. And and it was a complete chain of random events that led me where I was. I was trying to change job, and the answer was always no. Then I went on a ski trip, which was a company ski trip, and I ended up breaking a knee. Of course, I was very naive at the time, and I didn't realize that, having been forced to go to a ski trip, having told the HR that I was very tired, I could have done pretty much anything I wanted. And Morgan Stanley was not being very nice with me, allowing me to go to Rome and take care of myself. They were just very scared I was going to sue them, which, again, at the time I had no idea. Anyway, that gave me the golden opportunity to change job. And they told me, you can do whatever you want, wherever you want to do it. So I moved to the trading floor and become a specialist sales for banks. At the time, the head of the team was Davide Serra and William De Vinto. They're both amazing, incredible brains, and they've both been very successful later in the investment business. And from that, I moved to the prop desk of Morgan Stanley with Corrado Battista, which was the head of the prop desk. I started trading banks, and then in 2005, we started Phoenician Capital, which was a hedge fund, very small at the beginning, $80 million. So the peak was 700 million euro. Our best year was 2008. And then from there, yeah, I went to SAC, then I went to BlueCrest, and then LGR Capital. That's a long story short.
Yeah, and so now being at LGR Capital, what would you say the culture of the firm is like being in family office?
So LGR Capital is actually now part of a bigger platform, which is called North Rock. So North Rock is originally was a fund of fund that then transformed itself in a hedge fund platform. So it's effectively an incubator or smaller firm where you get seed capital and you can even decide to stay with them or, accept other investors. So at the end, once we joined them, we actually decided just to keep their capital and merge within North Rock, essentially. So I run a book that is financials, utilities, energy, commodities, and it's mainly Europe and US.
Yeah, so I was reading a book the other day, and I feel like there's been a lot of series on TV and films based off Steve Cohen. You were able to work at SAC. What was
Yeah.
the culture of the firm you're working at now compared to working at SAC?
I mean, SAC at the time was just an incredible place. I think Steve Cohen is the smartest person I've ever met. I mean, I've been privileged enough to work with some seriously smart people, including my Platt. I think Steve Cohen was just a different breed. I literally saw the man making $50-60 million trading the S&P intraday. He was just an incredible investor, an incredible human being, a caring person, super loyal to his employee. I don't think I can speak highly enough of Steve Cohen. He was just the most amazing boss, incredibly demanding, and rightly so. I don't think I ever saw him taking a day off. And I remember the worst thing that could ever happen to anyone was to fly with him because normal human being needs sleep and he doesn't. So he would kill you with questions and, he has always been 10 steps ahead of the rest of the world, right? He started thinking about quant funds years earlier than anyone else. And I think he's still, now it's called Point 72, it is still one of the most incredible places to work. I don't think there is ever going to be something like that anywhere else. It's so unique because it was built around him. Like a lot like a BlueCrest in a way, right? Which is built around Mike Platt, which is another incredible investor, very, very smart man. So these firms are very unique because they have a trader in the middle of it. And, they're kind of built as an image of the founder and traders. It's going to be interesting to see how both Point 72 and BlueCrest will work since they both stepped out of active trading. But yeah, I mean, it is one of the best experience professionally I've ever had, frankly. Northrop is very different because it's more of a, platform which gives capital to managers and gives large autonomy. It's a great culture. It's a fantastic place, but it's a different business proposition. So it's more of a place where you bring your business into it and you stay as a business almost. So there is a common culture. Again, there's a fantastic it's a fantastic environment. It's full of people that really want to cooperate and and we just get along incredibly well. But it's simply different compared
Yeah,
to SSE.
with the rise of the internet over the past 20, 30 years, social media and the democratization of information, I think there's a belief, particularly from the younger generation, that you can kind of learn whatever you want to know just by spending enough hours on the internet. What can someone not learn just on the internet and it takes to work at a place like BlueCrest or Point 72 or formerly SAC Capital to really learn excellence and what it takes to be the best?
I think it's actually key to spend time with people that are more senior because there is you can learn the theory and you can learn the knowledge, but to transform, at least in my business, to transform theoretical knowledge with actually making money is a very different thing. And the ability to spend time with people that have been there and seen things already makes a massive difference. Even if you're just doing quant, right? Because you're gonna be sitting next to people that probably do the same thing. I think it's in trading is like surfing, right? Many times the market is like a giant wave that will slap you down, and you need to have the ability to go back on the wave and surf again. And I think it helps a lot to be in an environment where people have done it already, and they can help you pick yourself up, when you get it wrong, or simply teach you when you cut your losses, which in my opinion is what makes you successful in this business, which is the ability to realize when you're wrong and cut the loss quickly enough. And I think that's difficult to learn on your own, just using AI or learning things in the internet, which is the reason why I thought not being in the office is really, really detrimental to juniors, because you're not going to absorb the culture, you're not going to learn from people that are more senior. And I think it's just going to slow progression so much. So in my team, we're in the office 4 to 5 days a week. And I really think it's important. Communication is important. Even listening to conversations that someone else has with the street, for example, makes a big difference, because you learn how the dialogue goes and you learn the questions to ask. You learn how to get the best out of street resources. And even now that people use AI transcript, right, to extract information from whatever the sell side publishes, even the type of information you want to get make a big difference, right? Again, theory is great, but to apply things in practice, you need to, it's quicker if you do it with someone else already done it.
As a contradiction to what I just said about learning and absorbing the people around you, is there a few words that you can give those that are learning to trade themselves or early on in their career, or even those that are more experienced but haven't quite reached the same level of success you have, in terms of knowing when and how to cut your losses without being too emotionally attached?
It's an art, not a science. So it's very, very difficult. Sometimes a gut feeling. I think the most important thing when the portfolio doesn't work or things don't go well is to learn and read as much as possible on why you might be wrong, why things might not be working. It could be looking at the context. It could be looking at what's happening around you macro-wise. It could be that you miss some information. It could be your timing is wrong. So the way I always did it was always to speak with people that have an opposite opinion, right? So let's say I was long a stock and my stock was not performing. What I would try to do was to speak to people who thought my stock was a sell. And then that would help, really go back to my investment case and try to see why I was getting it wrong. And the other way I do it is just by being very disciplined, almost mathematical about it. So, and that's something actually Steve Cohen taught me, which was always look at it in terms of 1 to 3. So if you have 3 units of upside, you cannot have 3 units of downside, right? So once you lose 1 unit, then you need to start evaluating your business case, right? And then you need to decide whether you buy more or you cut your losses. But if you decide to buy more, then if you lose another unit, you need to get out, because probably your investment case is wrong or your timing is wrong. And sometimes in our business, it's just timing, nothing else than timing. But again, a lot of it comes with experience. And sometimes, again, it's gut feeling more than anything else. But then, yeah, if you stick to a formula, then it becomes easier, I guess.
I just wrote that down.
The street is littered with people that try to buy the dip, right? And they keep on buying the dip. And the problem when you buy the dip is you're long something because you think it's cheap, right? And it's worth more. So of course, the second it goes down, it's going to be worth even more. So by buying the dip, you're just continuing to confirm your bias. So that's what I do, right? If the upside is 3 units and I am at -1, the upside becomes 4 units. So it's cheaper, but I need to really try to understand why it's actually not working. So if I decide to buy more, if I lose another unit, I'm out.
I was saying that I just wrote that down. So, my secret sauce. Either the podcast does well and everyone knows about it and the street knows about it, or the podcast doesn't do well. So that's me hedging my bets right there. Something I have found as I've just naturally aged and got closer to the point in time when I start my first real job and learn more about the quant space. I was speaking to someone very high up in a quant company a year or two ago when I did my first internship at a hedge fund. And he was speaking to me about what drives people within a quant space. And he was saying to me, it's not just about money. A lot of it might be the academic rigor. It's the wanting to excel or become the best in their field or be surrounded by amazing people. And that something like money could be so, not interesting to them. So I want to ask you the same sort of question. In the place that you're in today, what keeps you motivated?
Learning. I think my job is amazing. I don't think there is ever 2 days that go by and I ever learn new things, whether it's new way of looking at things, where it's something about geopolitics or where it's something about macro I didn't know before, or something about market behavior. It's a job that forces you to learn all the time and to learn new things. So you're never gonna get bored. You're always facing something new. And even if you've seen things before, which in my case, I've seen 3 crises already and stupid bull markets, but they always present themselves in different ways. There are always nuances, right? And there are always, some things that are different. And so it's just incredible because intellectually speaking, it's such a rewarding business, right? Such a rewarding job. For me, that's my high, right? The fact that I go back home every day and I feel I learned something new. And the other thing is, of course, when you get it right, or you get it very right, it's a fabulous sensation. But it's also the market is very quick at putting you into place. So you can go from feeling like a demigod to feeling completely useless, sometimes within days. So yeah, it's also a job that keeps you very humble because you eventually always get slapped, right? So you always get put in places by Mr. Market.
You touched on it before with regard to an AI transcript, but I feel like for someone outside of the investment space, that might only seem like a small singular change. Or if someone's, not thinking about it as rationally, they might think, oh, it's the start of a change that will lead to this all within the next month or two. But from a real on the boots perspective of someone that's in the business, what impact has AI had on your world of work? Not in 3 months or a year's time, but what's happened already in the
Look,
past?
it's incredible. The pace at which is evolving is incredible. So the way I started using AI, again, I'm old, so I'm not necessarily, very good with technology, but the way I started using AI was simply to allow me to summarize research reports, right? So I would dump research report into it, and AI would come out with the most important points. Then I started using it to write emails, for example. Then I started using it to help me write investment cases. I very often write investment cases for myself, right? Just to reflect on, to summarize everything I need about the company. So I started using AI for that. And now we use it to update models. Like I think most firms, everyone is training a junior AI, which is effectively a junior analyst that keeps on learning every day. The difference is he works 24 hours a day and spits the answers in seconds. So yeah, it's a huge difference, and in a way, it frees a lot of time because even as an analyst, although I think it's very, very important that analysts learn how to model, because if you don't know how to model, you're not going to be able to actually understand the number the machine is giving you. So it frees a lot of time to be creative and really think about companies rather than just, being there, inputting numbers on an Excel. At the same time, though, it really takes away, a lot of jobs in a way, right? You need way less analysts than before. So instead of having, 5 analysts, because most of them will spend most of the time on Excel, now you probably need 2 that spend much less time on Excel and more time just thinking critically about investment opportunities. So, yeah, no, I use it all the time now. And the other way to use it is, companies do conference calls every quarter when they report results. And, AI will get the transcript and then summarize an hour and a half call in, 2 minutes reading. So, yeah, it touches everything.
But something I've found with AI, and it's similar with ChatGPT, is one, it's not always accurate, but there's kind of like a thought that will probably improve in time. But also there's an element of sameness. Like if the AI that you're using is internal to the company, like it might be different to competitors. But if all the information about these companies is public, how do you find a differentiator in terms of using AI on your financial models or the way that you look at companies using AI? Like where does the differentiator come
I
in?
think the way you differentiate AI is that you create a junior AI, as I was saying, that you train to look at companies the way you want to, right? So let's say that you, I don't know, you're an investor that really looks at free cash flow yield, for example, right? And really looks at, I don't know, price to book and P ratio. I'm making a stupid example. You can train the machine by which when he looks at a company, uses exactly the same approach you do in terms of valuing the company. So it will spit a result that suits the way you look at investing, right? And that's a differentiating factor. So it's not AI per se, but it's how you train AI to look at the investment case, right? Because people have different time horizons, right? Hedge funds tend to be hedged. So not only the investment case includes a long and a short. You have different stop losses because people have different risk parameters. So it's not AI per se, it's how you use it and how you train it, essentially, right? The parameters you give it. The differentiation is that. It's not using Gemini or Grok or ChatGPT.
I want to look at it from a top-down level about how you think about investment decisions. And I kind of had four main things that came to mind. The specificity doesn't matter, it's more just the top-down level. I'd be curious about how you benchmark yourself, deliver consistent returns, deliver an edge, and how you think about things in the investing world. So benchmark yourself, consistent returns, edge, and how you think about things from a top-down level.
So benchmark myself is, I'm in the absolute return world. So I have a mandate. My mandate is to generate 6 to 7% a year. I have very low volatility, and so I have to respect a Sharpe ratio and deliver 6 to 7% with a certain Sharpe ratio and a very low volatility. I have like 1.5% volatility because of the mandate I have essentially. So my benchmark is just my performance. I don't care whether the market goes up or down. That's what I need to deliver. So that's my only benchmark really. How do I hedge myself? Depends. It's markets are very different in phases, right? There are phases like when you're in a bull market where your portfolio can be very concentrated and you can take uncorrelated bets on the long and on the shorts. And there are times where, especially Europe, where you have so many countries, where you really need to be wary of country risk. Not necessarily because you are in a sovereign crisis, but simply because you are in a situation where, I don't know, sovereign spreads are blowing up, for example, or there are fiscal issues, or the European Union is not getting its act together like it's 2 times out of 3 the case. So in that case, you will have to think about country risk rather than operating risk of the company you're looking at. So it really, really depends the phase you're in. So I always think first what's the biggest risk I'm running, and then I start from the biggest risk, and then I go down the risk scale. And based on that, I decide what I need to hedge and how much I need to hedge it. For example, there have been times where the only thing that mattered for Italian companies were the BTP boom spread, right? So that was the only thing you needed to worry about. So if you were long Tenaris, which is a company that is actually American but is listed in Italy and used to move with the sovereign spreads, then you had to be hedged with someone that was really exposed to the BTP bond spread that could help you cushion the only risk you had in that investment case that was linked to Italy. So again, it really, really depends the historical period you are. I think if you're American, it's slightly easier because you have one country, 1 year curve. Europe tends to be a bit more complicated. Um, what was the other one?
The other one was like edge. Like, how do you like think about things differently to everyone else? You know, like often like hedge funds will be like, what makes you think about this compared to everyone else? Is it the data? Is it your experience? Like,
I think in my case, his ability, I never had a year down in my life. And I think my biggest strength is the ability to recognize when I'm wrong and cut my losses quickly. Um, at the end, unless you're Steve Cohen, you're probably going to be right 60% of the time if you're very good. And I think what brings a lot of people down is, for a lot of people, that 40% is what eats the return of the 60, sometimes with interest. And I think my edge is really never allowing that 40% overshadow the 60 in a way. So I'm not arrogant enough to stick with losing bets. And I think, good at hedging broader portfolio risk. Um, so I really literally think that's my edge. I don't think I'm particularly clever nor better than others in understanding, what the right companies to bet on are. I think I'm just better at cutting losses
the
early
uh,
enough.
the job market in the UK can often be pretty backwards because a college graduate straight out is expected to have like 5 or 10 years of experience within a scope because the job market's just not as good. So I want to ask you a similar question. Like, as a portfolio manager, you've already had, I mean, your entire investing career, you've never had a down year, and so your edge is just your knowledge of your experience. I'm only 20 years old, and I'm sure there's a lot of other college graduates that have the same question. If I'm interested in getting into the hedge fund space and eventually I'm given a book to give my own investment thesis down, how do I develop my own edge, my own way of investment thinking, and how does that lead to success similar to yours in which you never
I
have a
think it's
down year?
spending time with people that are better than you. I mean, the reason why I never had a year down is because my first boss, Corrado Battista, was the best person I ever met at avoiding losses. He was better than Steve Cohen at that. He was simply incredible. And I learned from him, right? And then I developed my own style. And I took from as much as I could from the amazing people I work with. And there is no way around it. You're not gonna, I mean, I'm sure Steve Cohen probably was like that already at 25, but if you're not Steve Cohen, I think, or Mike Platt, I think a lot comes from spending time with the right people and trying to be in an environment where you can work consistently with people that are better than you, because that's how you're going to learn. Um, and you need time as well, right? Because when you're dealing with markets, unless you're quant, that's a different ball game. But you need to. Everyone is different, right? So you need to find something that suits you, because at the end, this job as a component of ability to take pain, right? Because when you're wrong, it's painful. And sometimes you lose a lot of money. And sometimes you can't sleep at night because you don't understand what's wrong. So it's literally ability to withstand pain. And everyone has a different way to go through pain. And to me, it's that simple. You need to find a style that allows you to take enough pain to do well, but not enough to wreck your ability to actually have self-confidence, because that's another thing that the market takes away from you sometimes, self-confidence, when things don't go well. So it is literally surround yourself, try to work with the best and try to learn from the best. And that's, to me, that's the best advice I could give people. Find a place where there are lots of people that are better than you.
A lot of your core responses come back to the unless you're the Steve Cohen, unless you're the Mike Platt. And I feel like I have to ask, like, what do you think makes them so special in the way that they approach things that means that they're able to make more than other people, lose less than other people, and consistently build, such incredible empires? Like, what do you think makes them special?
I
And
think they
is
have a
this something that can
vision.
be
They have
replicated?
a, first of all, they are generally smarter than 99% of the people. They are literally two of the smartest people I ever met. And they have a vision. So they're always thinking ahead. They look at the business and they're thinking ahead. And they're thinking at, what can I do better consistently, right? These people never stop. They never sleep. They don't take holidays. They're just completely committed and obsessed with doing well. And they have an ability to see the future in a way, right? So to shape business anticipating times, right? And I don't think you develop that. You're born with it.
I think I've spoken to hedge fund managers, people in the VC space, private equity, and I feel like there, to an extent, there's an overlap, both in terms of what people are discussing, what's doing well, whether in private companies, public companies. You know, there's the all boats rising sort of wave mentality, or is it the singular boat that does well? And something I'm curious, and there's a question in my mind at the moment, is sort of looking back over the years. You mentioned the financial crises. If I think back to, the dot-com bubble was before I was born. I was born in 2004. It's 2008 financial crash. And then also you could maybe COVID, you would call that something similar as well as there being, NFTs, there's the metaverse, cryptocurrency. We've now got AI being this big, huge trend. And something I've noticed is that, Facebook changed their name to Meta. I haven't seen much of the metaverse yet. I haven't seen as much from NFTs. Bitcoin is starting to do better again. And there's a moment in time which everyone in the world is saying, this is what we need, whether you're a Sequoia, the top VC in the world, or you're not as good VC in the world, this is what we need. Hedge fund managers are all talking about it, the streets talking about it, buy, this is going to change the world. And there's only one or two things that actually go about and change the world. So from your investing experience and the career you've had so far, and even just the way you think about things, how do you go about differentiating what's fluff and what's just noise versus what's real and will actually deliver returns into the future?
Um, yeah, I don't know. Just read a lot, right? Try to learn. Again, the way I go about it is always try to look for people that know a topic really well and try to spend as much time with them as I can. Or just reading a lot of research written by people that are more competent than me. And then, in case of AI, just literally trying it out and testing it to see if it's fluff or if it's actually real. I don't know enough. I definitely don't know anything about NFT. I never invested in Bitcoin. I'm not sure I understand it well. But AI, definitely. I think AI is not just a buzzword. It's literally, I see it in my day-to-day how it's changing my work life. It's making me more productive and it's freeing a lot of time to be more creative and to, think more around, outside the boxes. But again, it's very difficult when you're presented with new things to actually, make judgment very quickly. That's why I always spend a long time before making my mind up, trying to really dig deep and understand. But again, I don't think there is anything magic about it. It's just about spending time and listen to people that know more than you do on a certain topic, and then you try to make your mind up. There is no substitute for hard work and spending time on something to really understand it.
From the perspective of the street and from the banks, is there anything that they're not seeing that means that hedge funds are consistently able to beat them? And do you think there's ever an extent to which the street gets it wrong on purpose in order to be conservative or not to go more to one view or the other?
There's definitely an element of, whether it's China or, sometimes pure politics, right? If you know a company is going to do a lot of deals, are you going to write bad research reports? If you are a big investment bank, probably not. So there is always a bias, right? It's normal. Investment banks are business that have, a lot of sub-businesses into it. And yes, theoretically, they are very effective Chinese wall, but at the same time, it's logical that if you are an investment bank, you probably don't want to upset, especially governments. The streets gets it wrong many times, simply because it's safer. Groupthink is always safer, so the sell-side analysts tend to aggregate all towards the same view. But at the same time, it's very useful simply as a sounding board, and also to get to know what the world is thinking, right? For that, the sell side is very, very useful. I don't rely on the sell side for actual numbers or for, in-depth knowledge of a single company. I more rely on the sell side for macro, for, trying to understand what I'm not understanding, when I'm getting it wrong, helping me connect with companies. That's very useful. But also, again, as a sounding board of what the rest of the world is thinking. So I'm not necessarily, when I speak to a research analyst, I'm not necessarily expecting to learn something new in terms of the actual numbers of a company. I'm more expecting maybe a different way of looking at things, because he's speaking with other smart people that can give me a different view of things, or because they are more in touch with the company than I am, right? So it can give me an insight of what the COO is actually thinking in terms of strategic direction, for example. But yeah, the street gets it wrong, 5 times out of 10, to be kind.
From a from a perspective of looking at IQ, EQ, or any other form of intelligence, there's always a question of whether it's sort of just like you have it or you have an ability to change. And even within that argument, it's got to be at least probably around 70, 80, 90, maybe even 95% is what you're born with. And then there's some capacity in terms of a range of where you can go from there. And something I found interesting the other day is I was speaking to someone and they were saying, you shouldn't really try and become like Michael Jordan because there's only one Michael Jordan. And my perspective was sort of different in that, sure, IQ, EQ, your education are sort of fixed to an extent, but there's still the capacity to be the best you can be. And that's actually, one of the main theses behind these podcasts, learning from the world's best, become the best you can be. And so, as you said, in terms of learning from the best and being in these incredible environments with Mike Platt and with Steve Cohen that have enabled you to develop your investment thesis, for people that aren't going to be able to enter a Goldman Sachs or a Morgan Stanley or a hedge fund, not only because they're not interested in it, but they might not be good enough or might not have the right opportunity, how can they go about not necessarily beating hedge funds, but still being able to deliver positive or great returns? How should they approach their learning? What should they do outside of institutions to be able to get good returns?
Read as much as you can. Just read and learn. And look at historical patterns. For example, one of the things that is very underestimated, which I always tell my kids, is the study of economic history, right? Because history doesn't repeat by rhyme. And every crisis we've seen it has plenty of similarities with other crises we've seen in the past. Every bubble we go through is very similar to other bubbles. So to me, the first rule of everyone who wants to do this job is become very good at economic history and go through the centuries. That is number one, I think, because you're going to be able to look at patterns that repeat. So number one. Number two is read as many books as you can that have been written by real investors, whether it's Warren Buffett or Steve Cohen, because you can still absorb and learn from the books. And then read newspapers, Wall Street Journal, FT, try to absorb information, try to understand what's happening around you. Because we live in a world, especially now that quant funds are so prominent, we live in a world where there is a lot of top-down, there is a lot of macro, there is a lot of noise coming from geopolitics, which trump many, many times the bottom-up of companies. Eventually the bottom-up wins, right? But sometimes it takes more than a year to see the bottom-up coming out. So you need much more than just the bottom-up these days. The only way you learn is by reading, studying, and working very hard. And, we're not going to see another Steve Cohen or another Mike Platt or another Dimitri Baliasny. I mean, we're going to have other great guys, but these guys are all unique and all different in their own way. The same way you're not going to have another Messi or another Maradona, right? You have Ronaldo, but it's not the same as Messi. But you can become amazing without being Steve Cohen, simply because you work really hard and you become good at what you do, like with everything. There is no alternative to working hard. None. And all these amazing people, despite being incredibly talented, they still worked 24 hours a day, no holidays ever, right? There is no way around it. It's about, again, I go back to ability to take pain. That's, to me, it's really the key in everything. It's succeeding in everything, not only at this job. But this job in particular, I think it's, you can do it. Anyone can do it. Of course, if you're not inside any of these organizations, it's just much harder. Because you need to go and find the information.
I want to center around some of the current trends and topics of conversation at the moment and just kind of get your general perspectives on it. The first of that being Trump's tariffs. Like, how have the markets reacted from your point of view? What do you think? How do you think this plays out over the next 6 months to a year's time, or even beyond that point?
So people started with the idea that we were going to have 10% tariffs across the board, and the market was fine with that. And then when we got Liberation Day and we had this huge amount, tariffs, the market just tanked for a few days. Until people actually realized that, that was just a strategy probably, or maybe not. But anyway, the administration backtracked when it got dangerous enough. I think the signal was Bessent taking over from Lutnick. So, Bessent is a market guy. He's an incredibly smart person. So the second he got in charge, people realized that this was going to be done in a better way. I wouldn't be surprised if the final outcome is to go back to the 10% tariffs across the board, which Trump was talking about at the beginning, with the exception of China. I actually think the philosophy behind is not wrong, in the sense that we have, as a Western world, completely given up our power to produce anything to China. So if China tomorrow decides to stop giving us antibiotics, we run out of antibiotics within a month, right? If China decides we don't need to have paracetamol, we're not going to have paracetamol. Is that bad, right? If they stop giving us rare earth material, we're done. Now, of course, it's a remote possibility, but we put ourselves in a situation of being completely blackmailed by China. And there is no other way to go back from that, although I don't think it's entirely possible, but to even change the balance a bit rather than impose tariff and force corporation to go back to the States or to the Western world. So I didn't think that the philosophy behind it was particularly wrong. It's the way it has been implemented that was chaotic and absolutely nuts, in my opinion. So I do think we're going to end up in a very reasonable place. I think Europe is particularly badly placed in all this situation, but I think broadly speaking, we're going to end up in something that is manageable. And the market knows that, right? The market at the end recovered everything he had lost. And now there's going to be a period of digestion because we need to see the actual facts. But I don't think it's going to be as disastrous, for sure not for the US. And yeah, there's going to be some short-term pain in terms of higher inflation. But if it works, then the US is going to be in a better place in 5 years' time than what it was today. The other issue, big issue, is what do we do with AI, right? Because that's another area which Europe is non-existent, where there is the US and China. And it's a big battle, right? So the ability to control that also makes a big difference. So I see perfectly well where the US administration was coming from. But again, I repeat, the ways it was implemented was absolutely nuts and, very amateurish, if I may say.
I mean, you touched on that point there. And what I think is so interesting from an investment point of view is it's not just about saying random things in terms of policy, like money is won or lost. It's why, betting companies do so well because they can see all the data and then they put the house odds depending on where people are betting. And it's similar in the investment world is that I would argue that people in the investment world are often going to be even more accurate than policymakers with decisions. You touched on AI there. What do you think will be the material outcomes of AI in the next 5 to 10 years? Like, do you see a sort of Terminator type thing with AI and robots taking over the world? Like, what sort of realistic advancements do you think we'll see in that time? And do you think that will come down to the consumer or just be in the businesses?
Look, I'm not sure I'm qualified enough to speak about AI because I don't do tech. So I can give you a very unqualified and probably general observation, which is if 5 years ago someone would have told me that we would have human picking up boxes and machines writing poems, I would have told you you're nuts. But right now we're exactly there, right? We have AI writing lawyers' letters and, the gardener taking care of the garden. Now I'm sure Optimus or whatever humanoid is going to replace that too. But at the moment, we're in a situation where AI is doing the white-collar job rather than the more manual jobs. Look, my biggest fear is that this is completely unregulated. There is no one regulating these guys, right? For what we know, Musk could be putting a killer switch in every Optimus, and the day everyone is going to get the Optimus in our house, we have a potential killer now. We have no idea how these things are programmed. There is zero oversight. That's the frightening thing to me. There is absolutely no control. We have no idea what they're doing with this, with the way they are creating the artificial intelligence and training it. And I'm not even sure they know themselves what they're doing, in the sense that I'm not sure even, Altman or Musk know the full potential of these things and what they can be actually capable of. So when Musk says there is a 20% chance that this goes really bad, yeah, probably, maybe it's higher. I don't know. Again, my fear is the fact that everything is completely unregulated. People can go rogue, right? I mean, Musk could go rogue. I mean, I love the guy, but he can do whatever he wants. Nobody's checking what he's doing, right? Same for Altman. Let's not talk about the Chinese. So we have no control, not as governments and not as countries. That's my biggest uncertainty, frankly.
Speaking of China, that pivots me to my next question. Looking at the GDP growth of the US compared to the Eurozone last year, the US outgrew Europe, and there was a big thing of that the US under Trump was going to do really well, and so the US dollar appreciated. That was before all the tariffs, etc., were announced. But I saw a lot of changes, both in terms of where currency was being put, but also investments out of the US more towards the UK, China, Europe, as people were looking for potential similar returns. The UK companies not being valued as high as the US ones, if you look at pretty much every single metric. How do you think about, I mean, from your personal book, that's a sort of different question because that's your mandate. But as a sort of overall investor or even as an individual, how should people look at investing in the S&P 500 versus Europe, the UK, China? And does it matter whether you're investing in the companies themselves, what the government at the time is like, so like Conservative v Labour, Democrats versus Republicans, or also the general region that the companies are in?
Okay, so I think we are in a very, very, very delicate situation now, because I think Doge was once in a lifetime chance to show investors that it's actually possible to really cut spending, right? Because the Western world has a debt problem. It's not only the US. I mean, if you look at France, does anyone realistically think France or Italy are ever going to pay their debts? The answer is no. So Doge was, the chance to actually see it happening for real, right? To see structural spending being cut, right? And then the virtuous cycle of lower spending, higher growth restarting. Because a lot of the growth in US under Biden was just debt, right? The US just printed an enormous amount of debt. So, Doge has been a failure at the end. They cut very little and nothing structural. So if not even the most intelligent person in the world, or one of the most intelligent people in the world with a full mandate, managed to go around Congress and cut spending seriously, what chance do we have? So what the market did was just to, devalue the dollar and hike rates. That's what you do, right? When you think that the debt is slightly less sustainable. The problem is everywhere you look between US and Europe. I mean, aside from Germany, which is going to spend 1 trillion, so it's going to end up being not in a similar situation Italy and France, but definitely in a worse shape that they were now. There are not many countries that you can say are safe from, fiscal point of view. So, when you're in that situation, you create inflation and devalue. That's what we've been doing as Western world since 2000, basically, and then post 2008, really. I don't see any other way, because there is just no way we can pay the debt. So you need to devalue and inflate. For me, I really don't see how this ends well or ends in any different way. The only thing that could make countries reset, and this UK I think is one of the countries most at risk, would be, investors at some point just for whatever reason lose confidence, to freak out, you get a massive trust moment, right? And then you need to reset and restart for real, right? But unless you go into a crisis, no government is going to have the ability to make spending cuts they need to. So unless we see trust moments everywhere, I think we're gonna continue to go through this path of devaluing and inflating.
From a growth perspective, it's often been the Magnificent Seven that's been oftentimes the most talked about, leading the tech industry, which has then brought a lot of the growth within the US. But looking at it from a Europe perspective and bringing it out to the rest of the world, do you think tech will still be the major driver of growth? And if not, where do you think, or what will the other major growth drivers be within the next 10 years?
No, definitely tech and healthcare, medtech, definitely. Um, and healthcare because AI will improve ability to deliver drugs and deliver them quickly. Um, so definitely these two areas structurally. Europe, frankly, I've been incredibly bearish Europe for a very long time. I just don't see, it's a continent that is getting old, and just, I mean, we're the only place that regulated AI. Too bad there is no AI in Europe, right? So, I mean, there was a meme on Twitter on X a few months ago, which was showing, SpaceX landing,
Yeah.
perfectly well. And the major achievement of Europe in the last 5 years is the fact that when you open a bottle, the lid doesn't fall. I mean, and that's Europe in a nutshell. And a lot of people are talking about the opportunity now of talents leaving the US. But frankly, are you going to leave the US and come to work here for 1/3 of the money? Maybe some people are going to, but I bet 99% of people are going to stay in the US. So,
With the higher
we're not
taxes,
competitive. Yeah, we're not
uncertain
competitive.
government.
We tax productive people and we reward unproductive people. And it's like this across Europe. On top of that, we have an aging population, which we are replacing with unproductive people. Um, and yeah, the future is the Middle East, not Europe for sure. Um, I still think the will continue to be the engine of growth for the Western world. I don't believe in all this defeatism of the US. It's still the greatest country we have in the Western world, and it's still one of the few places where you can make it by working hard. And it's just, it's a mentality issue, it's a regulation issue, it's a tax issue. And I think the advantage is still there. It's going to stay there.
I want to ask three more larger scope questions before three final questions, more short answer based. What is a common misconception that people have about you or the work that you do?
I am very opinionated, and so people tend to think I'm arrogant. I actually think I'm the opposite because I question constantly myself. So yeah, that's probably the biggest misconception. People perceive me as quite arrogant, while in fact I'm not at all. I'm actually quite insecure, and I'm constantly questioning my belief. I'm just very opinionated, and I always feel, being Italian, entitled to express my opinions, whether required or not.
My penultimate of the larger, bigger, short answer questions. Very long-winded way of saying that. What's the best piece of advice anyone has ever given to you?
Best piece of advice. So I remember when I started my career, I was really focused on the money I was making because I didn't have any. So, when you come from nothing, even a small amount can seem really, really big. And the biggest advice, the best advice, was given to me by Corrado. And it was to look at where you want to be in 10 years' time. And anything you do at the beginning of your career is about maximizing your potential 10 years down the line, not your payout a year down the line. And that's incredibly useful when you start a career. And it's the best advice I give now to my analysts, right? When they try to make career choices based on maximizing short-term payout. It's just the biggest mistake you can do. You need to know where you want to end up. And once you know where you want to end up, then you work backward. And you try to maximize where you want to end up. And to make it faster, you never solve the equation by maximizing your payout short term, ever. Because that leads just to mistakes.
What's one question that you've never been asked before or haven't been asked enough?
Uh, Oh, that's a tricky question. Probably why am I so confident about certain things, right? So because I express my opinion always very forcefully, I feel people sometimes are just don't ask why I feel so forcefully about things. Um, and I think it would have reached me because it would help me understand whether I'm right or not. And it would help the conversation.
And what is the answer to that question?
Uh, I don't have an answer. I don't know. But I think if people would ask, I would probably think about it and find one.
This is me asking. This is your chance. You're on a podcast now.
No, I think it's a lot of time is just because when I express an opinion is because I spend a lot of time thinking about things and I read a lot. I think I have a subscription to every single reputable newspapers in the world. I even read the China Times.
But
And
how,
so
how
when
do
I have an
you?
opinion in something, it's because I spend a lot of time reading about it and talking to people about it. So I tend to have conviction because I spend so much time on things. But I also love debating. So by people asking me why, allow me to explain and therefore debate. And by debating, you learn. I love discussing, especially politics. And I think there is no other way to learn than to speak to people that have different opinions. And you
I
only get there by asking why to someone else, right?
I couldn't agree more, and I actually think that was the forefront of my Eton education. Is you'd enter a classroom, and instead of simply learning the material, they'd pin one student at one end of the classroom and one at the other who had differing opinions, and just ask them to talk to one another.
Yeah.
Because what I think is one of the major troubles of the 21st century is we all have our ideas which aren't fully formed, aren't fully educated, researched, or necessarily correct. I mean, we're not right about everything. Even
Yeah,
you
of
said
course.
the best
Yeah.
investors are only right 60% of the time. Yet, if we aren't willing to share our opinions, we have no ability to know if we're actually right, if we've actually researched it, thought about it the right way. But then to go a step further, if we have an opinion that's different from the person sitting across the room, we're going to get cancelled, we're going to get flamed, we're going to be treated very badly. And so it stunts the growth that we can have personally and
Yeah, of
as an
course.
overall society because we're just shouted down.
Yeah.
Do you think there's a solution to more people being able to offer their opinion in a way that doesn't evoke cancel
Look,
culture or restrictive
I hope
mentality?
that Trump, to me, the main positive of someone like Trump is to get rid of all this woke excess, which I think has been one of the most damaging things we've been through as society. This idea that unless you have the right view, you're not allowed to speak. We saw university professors not being allowed to give lectures. We've seen all kind of horrors, literally like communist era, right? So I really hope we're past that, at least in the US. I think in UK, unfortunately, we have a bit to go, but I think we're past the peak. And I think it's fundamental, especially since we have so many, we're such a delicate juncture in terms of government debt, in terms of AI coming. Now, more important than ever, to be able to have debate among people that have different opinion. And
As
yeah,
a
so I really, really hope we are done with all the woke culture, DEI, and all these excesses we've seen, because it's damaging the fabric of society. So we need to be back to a place where people with different opinion are accepted and allowed to speak. Um, and also we need to make sure that the kids are resilient, right? I was actually speechless because I thought it was invented by newspapers. I actually realized that it's true that there are classes at university where kids are warned about sensitive comments because they're reading a book written by Shakespeare, right? And they may get offended. I think it's absolutely insane. And I don't think you're ready for life if you have that type of mindset. And I think you're not going to be able to survive in the real world. So I think we're doing a disservice to kids uh, by enabling this kind of culture. And I think for that, university have a lot to be blamed for. So I hope that a lot of what's happening will now go back to a slightly more sane situation.
as a sort of more personal story as a reflection of that, what I find so interesting about your point with regard to it's not even about left or right here. It's more just about this is the real world. This is what's actually happening. You're gonna have to face it either now or later as a great detriment. So I think you already know the background to this, but my mother unfortunately passed away 2 years ago. And a year or two before she passed away, I was having a conversation with a family member, not in my immediate family, but a family member, and I was talking about, how my mum was doing. And they were lying to me. They were like, she's fine, she's going to live longer than us, it's not that big of a deal, it will be cleared up. And they knew within themselves that my mum was terminally ill, but wasn't willing to tell me. And I probably had more grief and I was probably more upset from having not being told the truth initially than if they had just told me. And that's quite an extreme example of something, but life hits you in many different ways, and life you can either take life as you can, or life's just going to happen to you. And the more you kind of shy away from what exists and what is there to be seen in life, the more that when it hits you, it's going to hurt you more. And so that was more of a personal example of how I found that honesty, even if it's the worst thing, even if it's hard, has to be done. Otherwise, it's worse down the line.
Yeah, 100%. And I have to say, you and your brother have been a shining example to every kid you ever been in contact to. Honestly, as a mom, I can tell you. I don't know how many times Giacomo's come back home talking about you and your brother. I mean, you guys are not only incredibly brave, but amazing human beings. And yeah, you are the living example on what it means to be resilient and to take life for what it throws at you and thrive despite that, right? So yeah, I wish more people would learn from you guys. Seriously, I mean, it's very heartfelt. This I told your brother many times. I mean,
thank you.
you've been incredible. I mean, you're just all incredible human beings. And yeah, I mean, I don't think it gets any better than what you guys have done despite what you've been through.
I want to ask one last major question before my three closing ones. And I feel like it's an extension of what I've just asked about. And it wasn't the question I was going to ask, but I feel like it'd be interesting for the listeners to hear. If you could put out one message to the world via a text message, a phone call, a billboard, whatever it is, some form of note, something in the sky, to everyone in the world, what would it be?
Talk to each other. Just talk to each other. I think one of the biggest problem with using the phones, the WhatsApps, and and all formal electronic communication is it can lead to all kind of misunderstandings, and it's not real, right? I mean, a message on a WhatsApp can be read in 10 different ways sometimes, right? I can take a form on its own. So just talk to people, talk to each other, talk to your friends, talk to, a stranger, just have debates on people that think differently from you. Go back to communicating for real. And I know it's probably not going to happen because the way we're going is not the way it is, but I can tell you by personal experience, just recently, I mean, friendship that almost broke down because of, all kind of miscommunication and tech issues. So, just talk to people, really.
Yeah, I'm guessing it's a thing that everyone's sort of encountered. You say one thing on paper, it can get read in a million different ways. I saw a video a couple of months ago, and I think it was some people saying a line from Shakespeare, and it was like 30 different actors, and they all just said it in different ways. Like, it's like, I'm okay. Oh, I'm okay. I'm okay. Like the way that you kind of say something completely depends. It's the nuances of conversation, how you say it. That is the entirety of what makes human connection human. And to take that away would be undermining what we were made to do as a social species.
Yeah, but look, I mean, this is personal, but I can tell you, I had a situation with a friend, which was actually, a mistake I made. And, I wrote her a message thinking I was saying sorry and expressing love. And then I discovered, a few months down the line that she had seen it as very patronizing and not at all apologizing, which wasn't my intention. So, I should have just picked up the phone or rang the bell at the door rather than send a message. And I think now we tend to do that rather than make the effort, because it is more painful to actually talk to someone and say, I screwed up, rather than send a message, right? And, using, WhatsApp or whatever, social media is kind of having a buffer emotionally, right? And I think we need to go back to have the courage to actually say things to people, whether it's, nice things or bad things. So that would be my advice.
My three final questions, the first one of which being, you can look at this in any scope you like, 3 months, 6 months, a year, 5 years, 10 years, etc. What's next for you?
I've been asking myself this every day for the last 5 years, and I always go back to the fact that there is nothing like this job. So every time I ruin a holiday because something happens, like this year, my first day of holiday, there was this whole mess with Japan. I ended up waking at 3 o'clock in the morning and for 3 days in a row, barely putting my nose outside, right? And so every time that happens, which is typically several times a year, I'm like, I'm done with this. I want to do something else. And then in reality, there's really nothing that stimulates my brain more. I think what I want to do later on, like probably in 2, 3 years, would be to go and study history. Um, because I really like history and like politics, and I would really like to spend some time in it. But I'm not entirely sure I could ever give up this job. And I've tried, like I spent the last 6 months actually actively trying to quit. But I always go back to it because, again, there's nothing like the markets and the adrenaline you get from the stimulation that comes from having to learn every day different things and being challenged every day.
My penultimate question, if I was to ask someone in 100 years' time, how would you want to be described and what would you want your legacy to be?
I'm not sure I'm important enough to think about the legacy. I can think the way I would like my kids and my nieces and nephews to remember me, which is a person that cares about others and a person that tries her best in whatever field and whatever she tries to accomplish, whether it's as a mom, as a friend, or as a business partner. I get things wrong more than I get them right, but it always comes from a good place. Yeah,
And my
that's what it
final
would be.
question, and I ask this to every guest on Personable, is what is one thing that you would want a listener to take away from this episode?
The one thing is learn how to take pain if you want to have a career in anything. Learn how to take pain and focus on the long term. That would be my main message to everyone, whatever field you're trying to get into. Because if you can't take pain, you can be the smartest person in the world. You're not going anywhere.
I feel like the things that you talked about today were almost the perfect realization of my thesis, in which to become the best, you have to learn from the best. And
Yeah,
I feel like that's the most common topic you've talked about today. In each firm you've gone to, you've learned from people who you quote as being better than you are in order to become that person. And I couldn't find that to be more true. And a lot of the stuff that I focus on is more personal growth focused and journey focused because that enables people to transfer over to different things. But in my own career throughout finance and the world of entrepreneurship and even technology and media, I hope to continually strive and push myself in all facets of my life to enable myself to become a better person for myself, but also the people around me. I really appreciate you coming on Personal, and there's a lot of gold in there that I hope that anyone listens to it is able to take away. So thank you very much.
thank you for having me.